This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Black Monday. It seems very much like we are going to be gapping down. It seems very much like we're really going to start to shake the tree. We're really going to start to put a couple of downside scenarios on the table, it seems. I know a lot of people are calling this Black Monday and they're drawing parallels to 87. We're going to talk about parallels to the taper tantrum in 2018, parallels to the C19 plunge, and a few other things as always. Before we get into today's episode, I want to just make a little nod or a, a hat tip to the occultists, the law of attraction guys, and just simply say that stuff works the most powerful in times like this. Remember, you deserve good feelings, okay? You deserve good thoughts, and you should curate an iron mind. One that operates in positive vibrations, one that operates in accordance with positivity. And remember, okay, it's just money. Unless money is your god, then it doesn't really matter, right? Take notes, physically write them down in a journal, do whatever you've got to do to make sure that you come out of this experience with new learnings, with new actual experience, rather than just getting through it, okay, and having achieved no new understanding, no new experience, any of that, okay? So find the silver cloud, find the silver lining, and enjoy the ride. Now, I have decided as a side quest, as an addition to the channel, we are going to start a gold DCA public portfolio here. So this will be in addition to everything else, okay? This will be available on the main channel, and I think it's going to look something like this. First of all, I'm getting the camelfinance.co.uk team to build a public sort of spreadsheet thing that everyone can track. And I think what we're going to do is we are going to just pull a blank gold chart up, apply the indicator over it, and every time that indicator flashes a daily cycle low, a camel cycle low, like one of these green ones right here, every time it does that, we're going to buy an ounce of gold. And then we're going to log this publicly. The rules are going to be as simple as this. When the indicator flashes a daily camel low, okay, we are just going to buy an ounce of gold, add it to the portfolio, and we're going to create a DCA for gold, okay, log it all publicly. And then what we're going to do is compare it to the overall performance of gold, the performance of the S&P 500, and we're probably going to compare it to another DCA strategy, like perhaps just blindly waiting for the first of the month and buying an ounce of gold then as well. And it's going to be interesting to see just how much better that indicator is at getting your average down. So I'm excited to do this. Just thought I'd let you know. So, welcome to Extreme Fear. A number 4 on the CNN Fear and Greed Index is pretty rare indeed. And that is, of course, because these are wild times. And it seems that a lot of people, like I said at the start of this episode, are drawing parallels to the 87 Black Monday crash. For those of you that don't know, that is the 87 crash right there. I believe we saw the Dow Jones drop something like 22% in a single daily candle back there. In fact, just checking my maths back here, you can see about 25% from the open on Friday to the ultimate low of Black Monday, okay? And it closed down, 22% in a single candle. So why is my indicator not picked? Oh, it has. Okay. I was like, where's the 4-year cycle low, bro? Anyway, so a lot of people are thinking that that is what's going on here, right? For some reason, a lot of people think that we're going to be limit down 22% in a single candle in the stock market, and never say never, right? Because it's a market. But every cloud has a silver lining. And as Sven points out here, okay, a fun fact about the 87 Black Monday low. It was actually the low, and it was never ever traded again. From there, we went up only, literally, all the way until today. Today is actually on pace to see another 4% down day in the S&P 500. In fact, let's pull the CNBC tab and check the pre-market. As you can see right here, the S&P is close to a 4% down day already. And that's actually, again, reasonably good news, because if today closes 4% down, it will be the third straight day of minus 4%. And this has only happened 3 times before during the Great Depression. Forward returns 1 day later, 2 days, 3, 4, a week later, 2 weeks, and 3 weeks later were actually very positive, as you can see right here. Okay, a day later, anywhere between flat and 9% up. A couple of days later, anywhere between 3 and 15%. 3 days later, anywhere between 2 and 13%. 4 days later, anywhere between flat and 17%. A week later, anywhere between 3 and 20%. 2 weeks later, we could be anywhere between 7 and 20% roughly. And then 3 weeks later, notice we're anywhere between 10 and 27% higher. Which again speaks to what I've been talking about of late, which is expect a violent snapback counter trend rally to occur. I know at the moment this feels like it's going to continue forever and never improve. But remember, on the way down, we always have violent snapbacks on the way. Mark Minervini here showing that most of the S&P 500 stocks, in fact 60% of those stocks, are now down more than 20% in a technical bear market. This would actually be the third cyclical bear market in a decade, and we don't normally see 3 bear markets in a decade. And the best news is, again, when you look back at the crisis and panic events, such as we're experiencing today, the future and post events look promising. And you can see that here. We had the C-19 plunge, the World Trade Center ordeal, the Kuwait invasion, the 87 Black Monday crash. We had the Arab oil, Nixon resigning, the Korean War, the market crash of 1929, Germany invading France. Okay, all of these big panic spills just like we've got today. And you can see that the spill were anywhere from a 13.3% correction to 43.7% top to bottom. But just 22 days later, in nearly all cases, markets are significantly higher. More importantly, 63 days later, in all cases but one, the markets are again significantly higher. 126 days later, in all cases, we are positive, telling us to keep an open mind about actually having a nice snapback trading opportunity coming up in the not too distant future. And if nobody has sold out of anything or people are looking to lighten up positions, then again, this counter trend bounce may well be an opportunity to lighten up higher up than we are now. Also, have been loving the Bitcoin outperformance relative to the QQQs. This is not something we see all that often, okay? It's actually not been a true breakout since all the way back in 2017. So it's going to be interesting to see if we can complete some kind of retest and resumption here. And we're starting to see talks now and speculation that we may even see the Fed cut rates before the next FOMC meeting. I don't think that's likely, to be honest. I think they're probably going to be really stubborn and really late. I think they are probably going to just let the market do the pricing for them. I think the bond market, again, is going to continue to do more easing than the Fed ever could dream of. But notice the shift, okay? We went from, a week or two ago? Not even that. Let's have a look. 1 week ago, we were at 86% probability of remaining paused. And already, just 1 week later, it's now practically 50-50. So again, this is going to continue to reprice this way. I don't think it's likely just because the Fed has made it abundantly clear that they do not bow to the president, right? They've made it abundantly clear that they're just going to keep doing them and they don't care what anyone says or thinks or does. And so I find it really, really hard to believe that they're just going to come out and do an emergency cut. And something else that makes me think there's no emergency cut coming is the cycles are perfectly in alignment for the 7th of May. So if we go out here, okay, we can see the next cycle for the S&P 500 right here would be expected sometime around the 5th of May to a day 44 would be the 15th, right? So if we were to get it on the 7th, which is that FOMC meeting, that would be day 38, which does make me wonder if what's coming here is some kind of, I think we're going to have a gap down today, and then maybe a big violent snapback rally, right? Push down into that cycle low, cuts, and then we get to reveal the true direction, right? Are those cuts and liquidity going to be enough to drive this? Or is it going to be too little too late and we do see another rollover? But notice how the cycle for the stocks right around that FOMC meeting, okay, to me speaks to seeing the cuts come in then, seeing some relief come in then as well. Same deal with Bitcoin, right? Bitcoin has run the stop on this trade, so that one's gone. But note the timing on the next cycle low, day 58, would be the 7th of May, right? Which makes me wonder if, again, this is just going to be more and more chopping, get to that kind of 7th-ish of May FOMC date, and then see a big breakout. I do wonder if something akin to this is what comes next, right? Boom. And we're not done there, because right now we're working on a daily cycle low for gold, probably going to have a counter trend bounce. I wonder if this is going to be a lower high and then complete another flush to a failed cycle into a weekly cycle low. But where is that weekly cycle low? Perfectly on the 7th of May. So to me, it seems like there's going to be no emergency rate cuts. It seems like this panic will resolve to a big counter-trend rally. Then we got to go and find some cycle lows into the 7th of May. And then from there, we really get to figure out whether or not all of these tops are truly in and everything is over and we're going straight into a great depression, great reset at all. Or whether there is more gas left in this goose and we can see some big, strong pushes and bounces. The current stock market setup, I know a lot of people are drawing parallels to Black Monday. I know a lot of people are drawing parallels to the C19 plunge. It could be that. It could, of course, be that something like this is in play. Okay, and maybe, just maybe, we get that kind of rate cut window in the 7th of May, like I said, and then we get a big V. I don't think this is going to be the case, though. And the reason I say that is back here, remember, they met this with a bazooka of money. It was like 6 trillion in QE and Fed balance sheet expansion. And today, you know, we haven't even got interest rates down at 0, so QE is not even going to be effective. Plus, they're still tapering the balance sheet. They've only just started to slow the rate of tapering, so to go from a hard pivot of slowing the rate of tapering to let's bazooka 20 trillion of QE down here, it seems highly unrealistic. Also, the Fed has been overly restrictive, massively stubborn, super disrespectful towards the idea that the president has any control over what they do or say or who they answer to. It just doesn't seem to me like they're going to all of a sudden bring out the bazooka of money and do that. So that makes me think this is not necessarily going to be like the C19 plunge. But I tell you what it does remind me of. I think it's extremely similar to the taper tantrum of 2018, right? What happened back here, for those of you that are not aware of your market history, was everything was gravy, okay? And the Fed said, oh, by the way, we're going to hike rates. And the market threw a taper tantrum. It said, no way, you're not hiking rates. There's no way you're going to do that, right? We're not having it. It crashed. I know it doesn't look like much here, probably. But that was a 20% bear market. And it took somewhere in the neighborhood of 56 trading days, right? A couple of months. And then what we saw here, once the market low was in, okay, is this was catalyzed by the Fed folding. The Fed actually, when it got here, said, oh, okay, whoa. Sorry, Mr. Market. Didn't mean for you to panic sell off. We'll cut them. We'll go back to zero again. And then the market said, okay, thank you very much. And off it went. And so I actually think we might be the most similar to this. This time around, just instead of a taper tantrum, instead of it pertaining to the interest rates, I think this is a tariff tantrum. That's what I think we're seeing. We've got all these tariffs coming out and the market just going, whoa, we're not having this. You can't be doing this. Policy's overly restrictive, right? We have to discount this. This is going to be really, really draining and deflationary on the economy. There's no way we can have this, right? The market's throwing a tantrum. The market's wobbling. And so I think by the time we get to this cycle low, 7th of May, and we see the cuts, in the meantime, we will probably also start to see the resolution for the tariffs. I would think between now and that cycle low, that FOMC meeting, we're going to see more negotiations. We're going to see some tariffs pulled back. I would think you'll see some major nations kind of fold and say, okay, look, we'll cancel ours if you cancel yours and all of this kind of thing. And it will probably resolve, again, to a big push, a big violent snapback rally. Now, it doesn't necessarily mean we have to go to new highs, okay? This was a double top, as you can see here, short term, and then it kind of went like this afterwards. But even if we kind of get a move from here to here and then it rolls over, I still think realistically that's going to be a big move. I mean, this is not for slouches, right? That's a 25% rally in the S&P 500. And notice how quick it lasts as well. This whole thing would be, as little as a month and a half, 2 months, right? So there's certainly opportunity here for the people that are able to kind of push their emotions aside and look for buy-side setups and opportunities. But don't get it twisted. The risk is still extremely high. So overall, super wild times. I was having a look around on Twitter this morning as well, and I could see that there is a massive range of opinions. Some of the bigger accounts like Raoul Paul seems to think that this is all going to be over, this too shall pass, and within 90 days, everything's going to be back at all-time highs. I noticed that people like the market sniper, Francis Hunt, very technical guy, he's calling this to be the start of the Great Reset. He's telling people to expect things like World War III and a second pandemic and all of this kind of crazy stuff. I'm not saying he's wrong, okay, by any means, but it's just that's a stark contrast to we're going to be at all-time highs in 90 days, according to Raoul Paul. I was also looking at David Hunter. He is still calling for a parabolic blow off top here to 7.5k S&P, which to me seems absolutely crazy. It seems like this surely must be invalidated. But as ever, I'm not going to discount his idea until at least a few months has played out, right? We're going to at least wait until we get to the middle of the year and then see what the charts look like before we can say this is certainly not going to happen. I think anyone that says anything is certainly not going to happen right now, playing a very dangerous game. Anything and everything is on the table, no matter how silly or ridiculous it seems, right? Everything from we're going to zero, it's the end of the world, all the way to we're going to be at 7.5k S&P by the middle of the year. Everything is on the table, including both of those scenarios and everything in between. So don't discount anything. I noticed Henrik Zerberg as well is also calling for this to just be a event that triggers a influx of liquidity and then new all-time highs. I can see a bunch of other chartists out there that are calling for this to be the top and saying that any bounce here will be to a lower high, which of course is still my base case, that we are going to get a violent snapback, but it's going to be to a lower high in the stocks and then we can reassess from there. I also noticed Bob Lucas has sold a third of his Bitcoin portfolio here. So he's stepping in and performing some damage control. I think it's a little bit premature, but who am I to judge another man's portfolio positioning? To each their own, right? Everyone's got their own risk appetites and tolerances as how. Kima Zabi put out a fantastic video called something along the lines of The Anatomy of a Crash. And he kind of breaks down the parallels to 1929. He actually makes an extremely compelling case that this could actually be another Great Depression type scenario. As always, he's open to more than one scenario. He's not just kind of saying this is what is going to happen, but he kind of draws a lot of parallels to 29. And frankly, he's absolutely correct. There is a scary amount of parallels, both technically and fundamentally. But like I was saying, you know, the absolute truth of the matter is nobody wants to hear this, okay? But the truth is, nobody knows. Absolutely nobody knows. Like I said, everything from we're going to zero, it's the end of the world, great reset, we'll own nothing, we'll be happy, we'll eat the bugs, everything from that to blow off top to 7,500 S&P all by June, all of that is on the table and everything in between. This is the absolute truth. And I know that people come to YouTube or they go on Twitter and they look around and they find the talking heads and they try to figure out, you know, which one's got a good track record and which one knows what they're talking about and who was right last time and blah, 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 blah. Everyone wants to be told, here, take my hand, everything's going to be fine, and here's what will happen. Everyone wants to have some kind of definite answer. But right now, we're in the middle of a risk event. We're in the middle of total uncertainty and panic selling. Panic selling can continue for a lot longer than you think, and it can snap back and be at all-time highs much quicker than anyone thinks as well. There's all manner of variables, okay? The Fed could absolutely tank this thing down 80% from here. Absolutely. It could very easily do that by just digging its heels in and saying, no, we don't care, controlled demolition. Obviously, they're not going to use those words, but they could. And equally, they could come out and do 20 trillion in QE, and then this 7,500 yellow squiggle right here of David Hunter's will turn out to be conservative, right? Bitcoin straight to $1 million on 20 trillion QE. Again, is that likely? No. Do I think they're going to do 20 trillion in QE anytime before 2026? No. I still maintain they're going to be late and reluctant and stubborn, as I have done. But I guess my point here is just understand what is actually going on, right? What's going on right now is a whole heap of uncertainty with a million different possible outcomes. And anyone that says anything along the lines of, oh, you know, this is what will happen next, they're totally making that up, right? They're totally trying to mislead you. Nobody knows what's going to happen. Nobody has any more of a clue than you, okay? So as ever, just keep taking it one day at a time. Don't allow yourself to get totally wrecked here. Do what's right for you. And most importantly, I would say be open to everything, right? Be open to absolutely everything, because everything is on the table. As ever, we'll keep taking it one day at a time, okay? We'll keep coming back here, making daily content, checking in, seeing what's going on. And I'm going to do my best to catch some counter-trend bounces over the coming days and weeks. I'm sure there was going to be plenty of violent snapback rallies. And then as ever, we're just going to keep sticking to the plan, which is to expect a lower high and be open to higher highs, right? Expect that lower high, use that lower high to sell into, and of course, maintain an openness to absolutely everything. Because if we do get some kind of big liquidity injection or some kind of major Fed pivot, something like that, if all of the tariffs end up getting cancelled, again, I don't know how likely that is, but if all of the tariffs end up getting dialed back and they're not nearly as severe as they are right now, all of that could take a couple of weeks and then bang, okay, everything is back to normal. So I guess my point is simple. Be open to everything, okay? Look after yourself, stay positive, and we'll be back tomorrow. So until next time, I hope you're doing well. Take care from me. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a bad